Is the housing market broken? Temecula and Murrieta median sales price for a single-family home has increased 7% year to date, despite 7% mortgage rates. Is this sustainable? Hi, Jessica here with the Genung team and Real Broker. Thank you as always for stopping by our channel. We are going to get right into it today. Concerns are mounting as to whether the Fed has broken the housing market. This article in Yahoo Finance did a good job of explaining the situation. The Fed's monetary tightening policy has pushed mortgage rates to their highest level since 2001, and they could keep going higher. When you go from record low mortgage rates to levels we haven't seen for almost 20 years, you destroy both the demand and supply. In the Temecula Valley resale housing market, supply has definitely been crushed. Demand is not nearly as strong as it was in the COVID market, but we still have buyers out there and there are transactions closing every day. The Murrieta Temecula Valley has been a very popular relocation market since basically the 1990s when the area started booming. While other areas in the country might be seeing buyer demand being crushed, my experience is that buyer demand is still here for those who can get qualified and those who are in a strong cash position, of course. The Federal Reserve is scheduled to meet about short-term interest rates again on September 20th. Markets suggest the Fed will most likely hold interest rates steady after the quarter percentage point increase at the July meeting. There will be 2 new months of data before the Fed's decision, so a rate increase is possible if inflation numbers are worse than expected or if the economy continues to run much hotter than the Fed would like. Conversely, it is highly unlikely the Fed would cut rates absent of some major economic shock. The lack of supply of homes for sale in the resale market is causing new construction in our area to boom. According to Redfin, newly built homes made up nearly 1/3, 31.4% of U.S. single-family homes on the market in the second quarter. That's the highest share of any second quarter on record, with new construction keeping the housing market afloat amid severe shortages of existing homes for sale. In the Temecula Valley a year ago, around this time in 2022, new home sales really started to stall out when the interest rates went up so drastically and prices started to come down a little bit. Buyers got cold feet and thought that based on these price declines that the market might be crashing, or they just kind of wanted to wait for the dust to settle. The builders started offering some great incentives in addition to price reductions. They were offering interest rate buy downs or below market interest rate specials. They were also throwing in free solar. They offered design center credits and many other incentives as well. While some people thought it was a dangerous time to buy with prices falling, in retrospect, it turns out that it was a brief buying opportunity. The current new construction boom is happening nationwide. We don't have August new build data yet, but according to CNN Business, U.S. home building increased in July, rising 3.9% from June, as low inventory in the existing home market continued to boost interest in new homes. The number of units started was up 5.9% from July 2022. Motivated buyers may find a good deal as prices stagnate, and large builders who are able to offer mortgage buy downs are able to offer buyers a much more competitive offer than is available in the resale market. We are seeing some of the large builders in our area offer these financing incentives, but only a couple of these larger builders have this capability. I thought this was interesting. I heard about this a couple weeks ago. Home builder stocks got a boost this week following a Monday filing that revealed Warren Buffett's Berkshire Hathaway made a big bet on U.S. home builders last quarter. The company disclosed new stakes in Lennar, D.R. Horton, and NVR in a securities filing. NVR, by the way, is the parent company of a group of builders such as Ryan Homes. How much did Buffett invest? You might be curious, as I was. These shares were purchased in the second quarter, and it was disclosed Berkshire Hathaway owned D.R. Horton shares worth $726.4 million, Lennar shares, which seems quite small in comparison, worth $17.2 million, and NVR shares worth $70.6 million. I thought this was interesting because Warren Buffett is typically known as a conservative investor, so it seems that he thinks that the lack of inventory in the resale homes is going to benefit the home builders. He might be onto something because my business is currently very new construction heavy. Normally, new construction is about 50% of my business, but right now it seems like even more than 50% of the escrows that we're opening lately are new construction homes. Lots of the home builders in our area started going back on wait lists because of the high demand demand, and several of my clients have finally been offered homes that were waiting. I have a few more on wait lists, but they seem to be moving through pretty quickly. These are not the wait lists from 2020 where it could take months and months. On average, for my clients that end up on a wait list, I'd say they get a home in about 2 to 4 weeks, give or take. For those that are taking longer, they are mostly just waiting for a specific lot to be released. That was a lot more on new construction than we normally cover in these monthly market reports. So now we're going to transition to our resale home stats. Starting with Menifee median sales price. Month over month, the median sales price in Menifee is up $8,000 or 1.5%. That's a modest increase. Year over year, the sales price is still down in Menifee. This is our only city where year over year the sales price is down, and it's down $17,000 or 3%. Moving on to median sales price in Murrieta, this is our only month over month decline, and it's very slight. It's only $1,477, 0.2%. So I'm basically going to call that flat. Month over month, year over year, median sales price in Murrieta is up $30,000 or 4.6%. Lastly, we're going to look at Temecula. Month over month median sales price is up $8,500 or 1.2%. So that's just a little increase in Temecula. And then year over year, it's up $27,500 or 3.9%. So very healthy increase year over year. And this is pretty typical right here in this about 4-5% range for year over year. You know, not the COVID increases, but typical real estate appreciation. So is this housing market sustainable? The question that I asked in my intro. Well, my opinion is that it is. I do think that this is sustainable. It's been going on for quite some time. Buyers last year, when the interest rates started going up, they did pause. But now it seems like that they've accepted it. The spring selling season just really took off starting in about March and April. Buyers were back out there and they can afford the 7% interest rates, but they are of course hoping that the rates are going to come down and that they're going to be able to refinance. Moving on to closed sales, starting with Menifee, month over month, closed sales are up 7 homes or 6.1%. Year over year, number of closed sales are down 55 homes. Again, that's just due to our extreme lack of inventory. Moving on to Murrieta, closed sales are down month over month 17 homes or 13.7%. And year over year, the closed sales are down 38 homes or 26.2%. And this Murrieta decrease in closed sales, to me, this is normal seasonality. It's as we get into the fall and into the winter, typically inventory and closed sales declines a little bit. But Temecula's closed sales month over month was up 11 homes, 11.1%, but year over year still down like all of the cities, 32 homes year over year or 22.5%. All right, median days on market. How long is it taking the typical home to sell? Starting with Menifee, month over month, it is taking 1 more day for a home to sell in Menifee. Year over year, it's taking 2 fewer days to sell. Moving on to Murrieta, median days on market, it is taking, again, same as Menifee, 1 more day to sell a home in Murrieta month over month. Year over year, it's taking 7 fewer days to sell. So this time, around August of last year was when, the interest rates again doubled really, really quickly. Moving on to Temecula, month over month, it looks like it's taking 2 more days for a home to sell in Temecula, and year over year, it's taking 8 fewer days. So, taking 1 or 2 more days to sell a home month over month, this is again seasonally typical for this time of year. Most of the buyers with kids were wanting to get in before the start of school. School has started, so there's not as many buyers out there, so listings are taking a little tiny bit longer to sell, 1-2 days. Number of listings starting in Menifee. Month over month, we have 7 fewer listings or a decrease of 2.8%. Year over year, this is the big news that we've been talking about for months and months. We are down 243 listings in Menifee. So that is a huge decrease of 49.9%, almost half of what we had last year. So Moving on to Murrieta, we are up slightly. We have 6 more listings month over month for a gain of 3.2%, and very similar story, but even more dramatic percentage-wise year over year. So we're down 275 fewer listings than this time last year, or 59%. Lastly, we're checking out Temecula, where there is 8 fewer listings month over month, and that is a decrease of 4%. Year over year, similar stat to Menifee, 50.4 fewer listings, or 196 fewer listings in Temecula year over year. Is this market sustainable? Let me know what you think down below in the comments. I'd love to hear. Thanks as always for watching. Hope this was helpful for you, and I will see you next week. Bye.